Hey guys, it's Luke. Welcome again. Hope you guys have a wonderful holidays. Rest of the holidays. I don't know. I'm not familiar with the timings right now, but yeah, I hope all of you have a blessed week, rest of the year, and a new year. Alright, so let's get started. So today, I had a much requested video, so I had to go on, and it's probably for 3 a.m. in the morning right now. But basically, we had a very obvious short. So we have a sweep, Josh, FVG for entry, target previous session low. We came very short of it, just 1 point south of it, and I'm going to explain why. And now, then in the morning session, we had we had the Chosh, FVG, but no sweep. So I took this trade. Most people didn't, and they asked me, why do you take this trade, Luke? And I'm going to explain why. Alright, so this takes a bit of an extra step, which I'm going to go over now. Alright, and we were able also to call off the high of the day. So 48.34. You can see here that at 11.24 I was saying I think the high of the day is somewhere here. And then a few minutes later, I was like 48.3 is max, right? So at 11.28. So if I go back to the chart, you can see that it was just a minute or two after, right? But I already started sensing at 24. But yeah, so we were able to catch this. And I'm not going to share how I found this yet. I'm going to keep it to myself. But maybe in the future, I don't know, if I get a lot of requests for it, maybe I'll share it. But it's one of the secret gems you get from studying ICT for such a long time, right? It's an ICT concept, it's not something random. And actually I might just showcase, give me a second. So here, if you're able to figure out, you will, but I'm not going to share why, but you can see this is for ES, it came 3. The anchoring point I'm not going to share, that's the secret, but I gave you here is enough evidence. If you can find it, well, congrats, okay? But that's all I'm going to be sharing. So you can see it came to 3, and normally it's between 2 and 3 that this happens. And by the way, you can see it comes to 3 to 2.5, it rejects here, then came back to, if you take your fib from this here to here, you'd see that this is the equilibrium point to the tick. Do it yourself. Anyway, back to why I took these trades. So in the morning, let's start with the morning. So in the morning we had a sweep, Josh, FVG, you know it. We also have a volume imbalance. So price came back here, we took an entry, and I showed it in the score, you can see it. And I took 2 contracts and I went down, I had another contract, went down all the way, very short of this. And I was expecting it not to take these lows, right? So people were waiting for these lows to be taken, I was not. And the reason is, I'll show you in a second. Now, this long here, the reason I took it, and I expected the price to not come back to London low. That's why I was happy taking this trade here without the sweep. It is actually pretty advanced, right? So, but it's very simple, right? So the reason is, and you can notice here I entered on a breaker. So if I go ahead and turn this on, LuxAlgo, you can see that there will be a breaker printed for you right there. So we have a breaker, FVG. This is a unicorn entry. This is the best entry you can get. Even on the 1 minute, even the 15 second, these are the best entries you can get, right? But that was the reason why I took this trade. So I added on the breaker and then on the retracement I had another contract, and I read it all the way to London high, and expected it to go a lot more, right? Like at least 15-20 points. But I follow my rules, so I didn't hold it all until the end, because you don't want to be greedy, right? You want to get paid. Anyway, so why did I take this trade here? Alright, so yesterday, let me go back into replay. Yesterday, I was in a long. Where? Let's have a look. Let's put it something like this. Yesterday I was in a long, but I closed it a minute later, right? So I was along here. Right, let me just turn everything off. So what we have here is, we have a low, lower low, higher high. This means from here to here, the highest green candle becomes the breaker block. So this green candle becomes the breaker block. You can draw it out, extend it, right? LuxAlgo does it for you, right? So you can see it be printed out in a second. There you go. So price came back up. I took an entry here, and it did go to the targets and continue up. But like, I don't know, it was in the Asian session. It was like everybody. It was a dead volume, so I didn't want to actually. I closed the trade right away. I closed it for like $37 in profit, but that's fine with me. Anyway, so the importance of this breaker is very important going into today. Why? Now let me turn this off. Let's extend this all the way till present time and get out replay because I hate replay. Okay, so this is the breaker now. All right, let me just turn. This is the breaker now, and you can see here. Let me just remove these lines. Here we have a breaker. Price went up, came back, retested it again, continued going up, came back. Very shy of it. So, going into the day, in the morning, I was expecting a new AM session to come back, sweep London, get support here at this breaker, which also is an FVG, so it's also a unicorn entry, and it's also, you would be able to, once if we take out London high, we'd probably even take out Asia lows, so we would have a lot of liquidity that has been swept, right? So, something secret that I would like to tell you as well, extra, I wasn't planning on this, but if you have an FVG and equal lows, if we sweep that, that's a very, very, very high probability trade. If we get displacement up and you get charged on FVG, then you can really trust that trade, right? Note that in your books. But anyway, I was expecting that. So the market went up, went down. I was expecting it to come down, take out this low, take support here at this breaker from yesterday, and then continue up. But what I noticed is we went down again, and we pumped really strongly without even using this. So at this moment, I knew that we're not gonna come back here. This breaker from yesterday is enough longevity to go all the way up. So what was my plan? Well, while we're here before this pump, while during this pump, I was looking at, we have a low, lower low, higher high. So this becomes a breaker. This green candle here becomes a breaker, and you're gonna see LuxAlgo draw it for you. So once we disregarded this and we formed another breaker, I was like, okay, so price found support from here, pumped, and now it's finding new support area, and this is going to be the low of the day, right? So here is where this is the last chance offered for the smart money to accumulate more orders in this breaker, which is also an FVG, so it's a unicorn entry. We're not interested in here, and we have unfinished business. So this pump from here yesterday, we're aiming to take out this high, right? This high. We came very shy of it. We came back. So my bison today was, we are very bullish. Why? Because we have unfinished business here, and these from yesterday and the day before. So we have a lot of untouched, unfinished business around these highs. So once I see this movement, I knew that, okay, we're not interested in taking these lows. We're going to save them for later. So we're engineering liquidity here for later when we get the shorts. Right now, our interest is bullish. And for the past few weeks, past month maybe, we're very bullish, right? And the center rally takes all the place, so it makes sense. Once we got this pump, during this pump, when I saw this pump, I went on the 1 minute. As soon as we went above this breaker, so once we formed the breaker, you see I'm anticipating the breaker before it happens. Right while you're here, this candle didn't happen. I'm anticipating that this candle will have a low, lower low. So once a candle goes above this high, this becomes the breaker. So I'm anticipating it before it happens, right? I'm not just reacting to price, I'm anticipating. So if I go to the 1 minute, as soon as that we went to, where are you? Come on, don't be slow, man. Oh my bad, I have to draw out the thing on the 5 minute to be able to see on the. So this is our breaker. Excuse me the background noises, the cafe is closing, so. This is our breaker, let's go on the 1 minute. This is our fresh breaker on the 5 minute. This is from yesterday. As soon as we had that pump on the 5 minute, it's split now into 4 or 5 candles, right? So we pumped again, we retest the bottom of it to the tick, went up. As soon as this candle closed, the next candle, as soon as it came back into this FVG, I took an entry here. Price went up, came back down, used this breaker as support. Once again, I took another entry here, pumped back up. I was going to add another one, but I was content with what I have already. And that's why, and then I continued going up, and I'm going to use the Fibonacci to know where we will go next. But that was the reasoning while I'm in the trade. But that was not the reasoning, that was the execute, that was the how, okay? That's how I got into the trade. Now, and that's why I didn't expect, so I was expecting price to come here, but we didn't. We just formed a bullish momentum, with leaving a breakup behind it, and then a Fiji. So this just shows that price is not, we have unfinished business up there, and we're not going to come back to these lows until really later time, maybe a different day, maybe next week, I don't know. So that was why I took this trade. I entered here on the 1 minute, came back here, I entered again here, And you can see how we respected this breaker block to the tick. And yeah, so that's why I expected the price we're not going to sweep. So this candle here itself is a sweep of all these lows, right, accumulating from yesterday, except these which have the most liquidity, but we're not interested in those. And the algorithm, we were able to anticipate that before it happens, right? So you have to be dynamic, all right? And it wasn't just a luck trade, or it wasn't just rushing in to take a trade. No, it was just getting fed new data as we go. So I was expecting the price to come back here, and then I was going to enter here without even a chosh or a FVG, right? Because I'm going to expect a really strong, like I said, equal lows, FVG, breaker. This here alone doesn't require a market structure shift. If you get one, whoa, well done. But still, so what I was going to do is going to enter here. Then once we get the chosh FVG, I'm going to add another position. But what we did is we get immediate rejection all the way up. So that's why I took this third. And now how far can it go? Well, what you can do is, while we're here, we didn't form this candle, the swing high yet, for the swing low, for swing high, for the standard deviation. So all we had was this candle and these, the low, lower low. So what made the breaker, right? So I took this is what we call breaker block projection levels. So you take the standard deviation from the swing low of the breaker to the swing high of the breaker, and my first target was, I was targeting London, and I left the other one running to 2, okay? Got it there. So you can see price went up, went down, retested, had more accumulated, more orders, went pumped up again. People were thinking that we're going to be going down here, but what they didn't know is that 2 to 2.5 is an area of rejection, right? So market went down, went up to here, respected it, dropped down until where? Until the midpoint of this range, from here to this high here. You can see it came back straight to equilibrium. Oh, just not even a point, like a quarter of a point, right there. Came into more orders and then pumped. That's why we didn't close below the 50%, so we're still looking for longs. But market pumped again, made a higher high, and then continue up. Now what do you think happens here? We have a low, lower low, higher high. So this highest green candle becomes a breaker block. Where is it? And I wasn't interested in watching here anyway, but like you can now see how dynamic price is. So here becomes your new breaker. Price goes up, comes back down, retest it, continue up, find support again, continue up. So now we're building, you can see from yesterday we build a breaker, another breaker, another breaker. So now I don't expect the price to remain bullish until we break below this level, right? And what did I say? If we go to 2.5 and reject how, we'll go back to equilibrium. If we find support here, immediate rejection, then we'll continue to go to 4. The market came back, went to 4, exactly. Right there, this is 4, you can see it, almost to the tick. Here, came back here, and now since market didn't show an immediate rejection, it stayed finding support here. Once they closed above it, that means we're gonna go to next standard deviation, which could be 5, 6, 7, 8, all right, or even 11 at some points. And how do you keep continuing is, once the price goes above 1, that means we're gonna most likely come back to the other one. If we get a rejection, it's gonna come back to the equilibrium, so you can plan your trades accordingly, all right? So that was really, really nice seeing it play out. And so what was I gonna say as well? But all right, so this was our projections. But now, after this point, we have now, this is a chosh, right? So swing low of the chosh, swing of the high of the chosh. Now we have data. We're getting fed new data. So now we can use not a projection, but an actual standard deviation of the market. And you can see now, price came back to 2 to 2.5 for an immediate rejection. This here was 3. That's not how I found it, by the way, but that's just another confluence to show you that everything is in synchrony. Price came back here, showed immediate rejection. Where do you think it came back here? Once we come back to 2, where do you think it came back to? Let me just delete a lot of stuff on the chart because I don't like having a lot of stuff on my chart. Where do you think it came back to? Let's have a look. It came back almost very shy of the equilibrium. But now this is not the range. The new range is from this low. This is the first very nice swing low before this move up all the way to there, right? You can see that price came back to equilibrium, to the tick, went up, retested one more time, came back up, and here Here we also, and I told people while we're here, I said every red candle at this point we're bullish. Every red candle should support price. So every red candle can be acting like an order block. You can see red candle support price. We never close below it. Here this red candle now becomes order block. So it was an FVG. It should support prices. Price went up. We have this red candle. It should come back to support this green candle. Price up, etc. Here we have, so every swing low with a red candle, you can see price came back. This is the order block. Price came back, come back to it. This is the red candle. You can see price can dip into it but cannot close below that. Supporting price. This here is the order block. You can see price came back, respected it, and we have this equilibrium in there as well, and came back to accumulate more orders. Come back up. Why did it come back up? Because we have this FVG here. We haven't filled. Came back to retest it and come back down. So now we're at equilibrium, so you expect that both bullish and bearish FVGs to be respected. Alright, this here is a balanced price range. Why? Because we have a candle up, we have a FVG up, we have a FVG down, came back up to test it, came back up to test it. So now this area here is balanced. The price shouldn't come back up here for the time being, so it should come back down, chill nearby the equilibrium. Alright, so I hope that was really useful. Whatever I did here on the chart was not planned. I'm showing you as live. So this from this equilibrium is here as I'm testing it with you guys right now. Okay, so that's how. I don't know if it sounds a lot of information, but like I said, I'm not looking for all this stuff. Once I'm getting fed the data. So while I was here, for instance, while I was here during the market open, my eye was on this swing low, lower low. So I'm expecting this candle to be bullish and respect prices up before it became a breaker. So I'm looking here. Once the price pumped up, close above it, this becomes a breaker. So I'm already anticipating that it's going to be a breaker before it gets there, before it becomes a breaker. That's power. Okay? That's power. You see another breaker? So the price went up. Here's a breaker. This low, lower low, this becomes a breaker. So let's go ahead and add, once the price closes above this green candle, the highest green candle, it becomes a breaker. So right now it's not a breaker, but I'm anticipating it's going to be a breaker soon, and the price shouldn't come back above it. So these PD arrays remain, these bullish PD arrays should be respected in future terms, right? So let's go back on out of replay. What do you see, guys? People think this is we've just pumped. Let me just turn this off. People think market pumped here, so now we're using resistance becomes support. That's BS. The only reason this works is because here we have a breaker and we have a fair value gap here, which came back to retest it. But you can see how the body came back to retest this to the tick once, twice. So now I don't believe the original breaker block will serve us good. This will be our new breaker, right? Etc, etc, and you can keep doing this, and you can put in your stop loss below them. For example, now this low, lower low, this high candle becomes, this green candle becomes a breaker. So you can see the price now come back, fill it to the tick, use that as support, pumped up. All right, again, low, lower low. This green candles, the high green candle becomes, you can use both of them as well. The highest green candle becomes a breaker, and you can just keep going down until we have more data. All right, and you can see price just use as support, the consequence of it twice. Let's have a look. You can see it coming to the midpoint of it, respecting, right? So once you start seeing candles closing below the red order blocks, the red candles stop. When you see red candles stop respecting the price, then the bullish momentum, then you can start looking for a reversal. Here everything is being respected to the tick. After this point we don't have any data. This is all-time high, right? So here is the last time we had a chance for an entry to going up, right? And yeah, technically that is how, right? You can manage your position. So let's say you're no long. Once the price come back, you expect price to be respecting. Once your stop loss, let's say, is here. Once the price closes below this breaker, then we shouldn't be doing that. So then you can close your trade earlier or move it to here. And if price respects it, then you can move your stop loss here, because the price will not come back to this area. It doesn't have to. It's just accumulating more orders. Price went up, etc, etc. So here we have a low, lower low. This green candle becomes a breaker as well. So you can keep doing this until one of them breaks. I don't want to say the word break. Once one of them becomes disrespected, you see price go up, respect, pump up, and after that we only have this low, lower low, low, lower low. So this highest green candle, this is the highest green candle, becomes our breaker block. You can see price came back, use as support, pump back up. All right. Yeah, so I hope this was useful, and I'll see you guys again soon. Peace.